welcome to CMC Markets with me, Michael Hewson, in this quick summary of the week just gone and a quick look at the week ahead. It's been a very positive week for equity markets. We've seen new 33-year highs for Japanese markets, the Nikkei 225. We've seen the Nasdaq break above 13,600 and one-year highs, and the S&P 500 has moved up to 4,200. And a lot of the reason behind this advance in equity markets has been optimism that there will be a solution in the coming days to the current political wrangling around the US debt ceiling. What we've also seen, rather strangely, is also a big advance in the US dollar yen up at 138, and US 2-year yields at 4.2%. You know, that doesn't exactly ring right when it comes to how assets should move. Equity markets up, yields higher, and the dollar higher. As we look ahead to the upcoming week, obviously, hopefully there will be a solution to the debt ceiling and we can sustain these gains that we've seen in equity markets. My three things for this week are UK inflation, the latest Fed minutes, and these should be interesting in the context of the narrative that's come out from a whole host of Fed speakers this week. Fed governors Michelle Bowman, Philip Jefferson, and also voting member Lori Logan of the Dallas Fed, who suggested that the data does not support a pause in rate hikes. So that would appear to suggest that there could have been a significant debate in some of the Fed minutes from the meeting earlier this month about the pros and cons of keeping a rate hike on the table, or whether or not there was a discussion of a pause. We've also got first quarter numbers from Nvidia, and that's particularly important given the fact that the Nasdaq 100's advances this year, it's up 26% year to date, have been driven by Nvidia, whose shares are up 116% so far since the start of the year. Their first quarter numbers have been driven by speculation that they'll be a big beneficiary of AI, artificial intelligence. We're expecting first quarter numbers there of $6.5 billion, give or take 2%. And last but not least, I talked about April inflation numbers from the UK, expecting a big decline from the 10.1% that we saw in March to around about 8%, 2.1% decline year on year, from 10.1% to 8%. And a large part of that, it is hoped, will be as a consequence of the energy price cap, which expired at the end of the first quarter and will be reflected in a big drop from 10.1 to 8%. And that will be good news from the Bank of England and a potential pause at the next meeting. So that's it for this week. Thank you once again from me, Michael Hewson, and CMC Markets Connect.